the trade conflict between the United States and practically the rest of the world has taken a sudden turnaround courtesy of President Donald Trump. The U.S. president today said that he's suspending for 90 days reciprocal tariffs on most nations except China. The news unleashed a tsunami of green as in gains. Wall Street is just closed after a day of volatile trading. Shares on the Dow Jones Index ended Wednesday 7% higher. Markets had been slumping on fears of an escalating global trade war before Trump suddenly backtracked on most of the sweeping tariffs against other countries, which took effect for just one day. Tariffs on Chinese imports, meanwhile, were hiked even further, now standing at 125%. Here's the U.S. president explaining his sudden decision.
You have to have flexibility. I could say, here's a wall, and I'm going to go through that wall. I'm going to go through it no matter what, and keep going, and you can't go through the wall. Sometimes you have to be able to go under the wall, around the wall, or over the wall. I think in financial markets, because they change. Look how much it changed today. We went from, pretty moderate today, but over the last few days, it looked pretty glum, to, I guess they say it was the biggest day in financial history. That's a pretty big change. And I think the word would be flexible. You have to be flexible.
Well, for more now, I'm joined by Bruce Stokes. He's with the German Marshall Fund and an expert on economics and transatlantic relations. It's good to have you with us. So is the news of the U.S. president pausing these tariffs, is that what the stock markets, is that what they've been waiting to hear?
Certainly, they were hoping for that. He seemed to signal early this morning he might be doing this. But I think it's only a reminder that what goes down can go up, but also can go down again. And we have a 90-day period to supposedly negotiate some of these tariff threats away. We'll see if actually Trump can deliver on that. Meanwhile, the tariffs on China have increased, as you said, and this will disrupt global commerce dramatically. Europeans in particular need to be very worried that the Chinese will begin to ship more product to Europe because they can't sell it in the United States, or they'll ship it to Southeast Asia or other places and displace European exporters.
How do you explain what the president did today, and do you understand the timing of it? I mean, why did it happen now?
Well, the speculation is that while Trump campaigned on the stock market, what he really cares about is the bond market. And the bond market in the last couple of days was very volatile. The interest rate that the government was going to have to pay on 10-year bonds and 30-year bonds was going up, which means that everybody's mortgage in the United States was about to go up. It meant that we had to pay more interest to sell bonds to people to fund our deficit. And I think that is what spooked them, along with the fact that you had a number of his billionaire cronies on Wall Street going public and saying that the tariffs were a mistake.
And that, as many people are reading it, was the reason why he decided to slam the brakes, at least for 90 days, except for China. Why not suspend these tariffs also for China? I mean, why is China the one left standing?
That's a good question. I think the problem with that strategy is that the Chinese, at least initially now, have shown that they're more than willing to go toe-to-toe with Donald Trump. And we should remind ourselves that the Chinese have been willing to subsidize their economy enormously over the years when things look rough. Now, they do face a problem. They've had a slowing economy in recent years. So they look more vulnerable, but they also see this as a political challenge that they're not willing to back down on.
And who do you think will profit the most during this tariff break over the next 90 days?
I think that it's unclear who will benefit. I mean, clearly the American consumer may not need to pay tariffs on certain taxes, basically on certain imports. I think the stock market and the bond market will balance itself out again. I think the real danger going forward is that Trump has demonstrated what we all really knew about him, that he can change his mind on a dime, that he loves to jerk people around. And I think the lesson the world has to learn from all of this is he's a bully. And the lesson we all learned in school was if a bully demands your lunch money today and you give it to him, he will demand your lunch money tomorrow. Yeah. And I think that we need to prepare for a very rocky next 4 years.
Bruce Stokes with the German Marshall Fund. Bruce, we appreciate your time and your analysis tonight. Thank you.
Thank you.
Well, the move by President Trump, it came just hours after the European Union announced its own retaliatory tariffs on U.S. products of up to 25% starting next week. But it was the raised levies from China of 84% and Beijing's clear statement that it would not back down, which inspired Trump to single China out.
The tit-for-tat tariff dispute continues without pause between the world's two largest economies.
As you all know, the president just put out a statement announcing an additional tariff on China. The tariff on China will now go up to 125% because China imprudently decided to retaliate against the United States. And as I said at the podium yesterday, when you punch at the United States of America, President Trump is going to punch back harder.
On Truth Social, Trump said the new measure was, quote, based on the lack of respect that China has shown to the world's markets. It comes after Beijing said it was imposing an 84% tariff on U.S. goods in retaliation and vowed to, quote, fight to the end in an escalating trade battle with Trump. The U.S. insists that the tariffs are necessary to revive its manufacturing and maintains that the blame for the escalation lies on Beijing.
Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners.
Beijing says the U.S. is making a mistake and that it has filed a complaint to the Geneva-based World Trade Organization over the measures.
The Chinese people cannot be denied their legitimate right to development, and China's sovereignty, security, and development interests must not be infringed upon. We will continue to take strong measures to safeguard our legitimate rights and interests.
The World Trade Organization has warned that rising tensions between the U.S. and China could see bilateral trade plummet by as much as 80%, and that the conflict could damage the global economic outlook.
Joining me here in the studio now is our China expert, Clifford Coonan. Clifford, it's good to have you back in here. You know, we have now a trade war that has gone from the U.S. against the rest of the world to the U.S. against China. Is that a winner or a loss, at least for the next 90 days, for Beijing?
For Beijing, I think it poses a serious challenge. I think this is like a boxing match where you have two serious heavyweights and they're sluggers and they've just started now and the punches are starting to fly and they're picking up an intensity. This is quite an escalation from Trump. The Chinese like to keep things slow. They prefer a much slower approach to things, but now they're going to be forced to act, and that's going to be very difficult. There were meetings in Beijing today of the State Council, which is the cabinet. They don't like to be reactive. They like to define what's happening. They like to control the show. So this is going to wrong foot them. But at the same time, these are seasoned campaigners. These are fighters.
What are they going to think about what they heard from President Trump today, basically accusing China of not showing enough respect?
Yeah, it was an interesting line. I mean, he said that, and he also said they want a deal, they just don't know how they're going to do it. Yeah,
which could be understood as being very condescending, right?
Yeah, that's pretty disrespectful in many ways. So, you know, but this is part of the rhetoric which he's rolling with. The language that we're seeing from China is much more predictable. It's just sort of given that everything on the ground is being characterized as a struggle, that this is almost like a trade war, the war part of the trade war is really being emphasized. That people they see this as a existential battle against the imperialist West. That sort of language is still in there, and it's proving very powerful in motivating the Chinese people for what could be a prolonged conflict.
What do you think is going to happen next? Because Xi Jinping, he has basically put his credibility on the line here by escalating the situation.
Yeah, I think this is going to be something, I don't know how much he could have foreseen this coming, certainly not. I imagine his advisors around him are quite anxious about having to tell him about this. But I think it's definitely something that he's going to have to deal with now. I think you're going to see still slower steps. I mean, there will possibly be, they will retaliate with similar tariffs. They're going to be looking at their allies around the region. They're going to be trying to form alliances because this wrong foots them in terms of their alliances in the region too, because he's removed many of the tariffs against the US allies in the region who were who were angry at this. So they still left the 10% tariffs in place, by the way. That's true. This is really important. I mean, that's still a lot. And there's still the auto tariffs that are in place and various other things, so it's not nothing.
Well, what does Beijing have at its disposal now? I mean, they can keep tit for tat with the tariff increases, but is there anything else? I know people have been concerned about Beijing just, dumping a lot of U.S. treasuries that it owns.
I don't think it can afford to do that. It needs the U.S. treasuries. That's its security blanket. The economy is slowing. We've got $2 trillion worth of a manufacturing industry that needs an outlet. You can talk about them selling the goods to Europe, but Europe doesn't want them either. I mean, Europe is already pretty full. So they'll let the currency depreciate. There's various tools they have, but they've got a lot of debt. They've got an economy that's slowing, a property crisis. There's a lot of economic headwinds there, which is going to make it very difficult for Xi Jinping to act.
Yeah, it's going to be hard to find a replacement for all of those American consumers who've been buying goods made in China, that's for sure. Clifford, it's always good to have you here. Thank you. And for more, we want to bring in now Isaac Stone-Fish. He's the CEO and founder of Strategy Risk, which analyzes the risk of doing business with China. He's also the author of the book, America Second, How America's Elites Are Making China Stronger. It looks at the backsliding that has taken place in U.S.-China relations. Isaac, it's good to have you on the program. I want to start by getting your reaction to the news that President Trump is suspending most global tariffs for the next 90 days, with one big exception, that being China. How do you read this?
It is stunning news. It's been such a whipsaw week for the markets. I think it shows that the folks who are advising President Trump understand the national security and economic imperatives of reducing China exposure, and that for now, and this could get overturned by a tweet any minute, for now, the hawks have won out.
And as we understand from what was announced within the last hour, the president is increasing the tariffs on imports coming from China. And if I'm reading it right, he's doing this because the Chinese dared to retaliate with their own tariffs. So is this Trump punishing China?
It certainly seems to be. It seems to be him communicating that other countries have shown a willingness to negotiate, and Beijing hasn't. There's been a lot of pretty aggressive rhetoric from Chinese sources, but they've been mostly low level. The Politburo and senior leaders in China have been relatively quiet on this. Perhaps this will draw them out for a response. It's the middle of the night in China, but certainly very curious to see what kind of reaction we get once Beijing and Chinese markets start to wake up.
Well, what do you think would be in China's interest to signal to the Trump White House, yes, let's negotiate? I mean, what would prevent them from doing that?
The interests of China and Chinese people and the Chinese Communist Party on these things, I would say, are quite different. I'd say from the party's perspective, it's how do we show a willingness to negotiate while at the same time not showing domestically that we're backing down, while at the same time understanding from Beijing's perspective also very real national security imperatives. The two sides are decoupling because both militaries are preparing for war, whether it's over Taiwan or over other issues. And so we have to understand that while we see some of that from the United States side, it's a much larger driver from the Chinese side.
Yeah, here in Europe, everyone has been talking about decoupling, de-risking from China. Could these tariffs, could they drive Europe back to doing business with China? And before you answer that, I want you to take a listen to what the U.S. Treasury Secretary had to say. Take a listen.
The biggest offender in the global trading system is China, and they're the only country who's escalated. And I can tell the rest of the world that I'm not sure whether it was the prime minister or the economic minister in Spain made some comments this morning. Oh, well, maybe we should align ourselves more with China. That would be cutting your own throat.
Cutting your own throat. I mean, that's worst case scenario coming from the eyes of the United States. But would China see it that way?
Beijing would certainly not see it that way. I understand and mostly agree with the U.S. government view on this because, and I keep coming back to this, but I think it's such an important point because of the national security imperatives here. And for so long, economic policy has driven trade. And in the President Trump White House, so a lot more focus on equity and national security implications there. I will say, in terms of decoupling and de-risking, what a lot of companies are doing are trying to double down on a China for China strategy, where they source from China for products that they sell into China, both to avoid tariffs and also to not get covered in conversations about China exposure. And it's a strategy that has some advantages and has some concrete disadvantages as well.
And what about blowback onto the U.S. economy? I mean, we are seeing yields on U.S. Treasury bonds going up. There's always been this fear of China unloading all of its U.S. Treasuries, kind of the nuclear option. I mean, are we closer to that now than we've ever been before? And what would be the risks for China if they did that?
I think the nuclear option is, not to be too gallows humor here, but actually does involve a war between two nuclear armed superpowers. And I don't think the widespread sellout of U.S. Treasuries by Beijing would have nearly as catastrophic of implications as people think. I think where the catastrophe lies for the market in the near term is a full-scale decoupling. And I think, broadly speaking, it's necessary for companies to reorient their supply chains and to not be so heavily exposed to China. But certainly from a markets perspective, a inflation perspective, it could have some very, very real and heavy costs on American consumers and manufacturers.
That's true. I just want to ask you, why do you think China would not unload those Treasury bonds in an act of economic war? Because that is a threat that we have heard time and time again for at least the last 20 or 30 years.
Their preferred methods of economic warfare are things that are much harder for us to disclose as coming from China or as being directly related to it. So, strong restrictions on U.S. companies in China, severe hacking, severing of shipping lines or underseas cables, harassing, arresting, torturing business executives. They do that far more often and far more readily than something like this. I think also, the disruption of global financial flows, not by a massive Chinese sell down, but by certain types of cyber attacks that we can't directly attribute to the Chinese Communist Party, but has their fingerprints all over it. There's a kind of silliness in cyber hacking about not attributing things to the Chinese Communist Party, but just shadowy networks of people with the affiliations.
Yeah, a lot of plausible deniability going on, I think is what you're saying. All of this, though, what's the impact of what we're seeing right now with these tariffs on two things? The future of Taiwan and also the ability of Xi Jinping to hold on to power as tightly as he has.
Great questions. I'll try not to just leave you with too early to say. From a Taiwan perspective, I assume Taiwanese government officials feel very heartened because this is when the U.S. administration pushes harder against China, usually there's a commensurate strengthening of the relationship with Taiwan. In terms of Xi Jinping's hold on power, so much depends on how the other members of the Politburo Standing Committee view him. And I think for that, it's, am I showing weakness? Am I showing that I don't have the, for lack of a better word, the cojones to do this? Or am I clearly calm and in control? And I think there's going to be a lot of signaling from the Chinese leader, both externally that we see and then internally that we just can't see.
All right, cojones and tariffs. It's not every day we can put those in the same story. Isaac Stonefish, Isaac, we appreciate your time and your analysis tonight. Good talking with you. Thank you.
Thank you.
And I'd like to welcome Akin Odeleye now. He's the Deputy Editor of Investing at Business Insider. Thank you so much for your time. Now, the Trump administration says the president's decision to pause these tariffs, except for China, of course, was part of a grand strategy to bring all of these nations to the negotiating table to reduce the US trade deficit. Do you believe that, or was Trump's hand forced by the markets?
Thanks for having me on. Well, the reporting that I'm seeing today indicates that the administration's hand was forced. Particularly today, we saw, for the first time since this saga began, the bond market really begin to react in a negative way. Now, of course, the stock market had sold off leading up to today, but today we saw the bond market and the dollar weaken. And those two markets are typically places where investors flock to for safety in times of crises. So that reportedly rattled the administration and the Treasury Department to the point where they made the decision today to put the 90-day pause on. But of course, if we're taking the administration's point of view, this was all part of a grand plan. But we do know that they had been watching the markets and had been getting lots of calls from executives and from people in the Republican side of the aisle who were really concerned about the impact that this was having.
Yeah, and markets did rally after this back down was announced. How much more turbulence do you expect there'll be going forward, or is it now all over?
I think it's far from over, although I wish I could tell you in which direction, up or down, the market's turbulence would be. The two largest economies in the world are still in a trade war, so let's not lose sight of that, even though the rest of the world has been spared for now. We do know that a lot of American companies rely on China for a lot of their supplies, and there's still a lot of uncertainty about what this all means for them. Consumers may also be feeling uncertain at the moment, wondering whether the next iPhone or the next Nintendo Switch will cost many hundreds of dollars more than they do right now. So there's still a lot of uncertainty. And as we've seen in the last couple of days, things can change very quickly. So I would not unfurl the mission accomplished banner as of yet.
Just finally, how ready do you think the rest of the world is now to work with Trump on trade in the way that he wants? Or how ready do you think the rest of the world should get?
Well, as your previous guest was saying, the rest of the world can trade with each other. And that's part of the concern among some economists in the US, is that China now becomes a more appealing trading partner for a lot of countries and companies that would otherwise have played ball with the US. But, I think it's still too soon to see just how effective these conversations between the US and other countries are, especially because we know there's a lot of volatility in the approach that this administration is taking. And so it's hard to see how much or which concessions individual countries make. We also know that there was a bit of a ad hoc mechanism to how the tariffs are slapped on various countries. And so it's really hard to tell whether countries will play ball. But we do know that they will at least, pick up the phone and talk to the White House, and they should, because this is the world's largest economy after all.
Thanks so much for that, Akin. That's Akin Odeleye from Business Insider. Thank you very much.